How's it going, guys? My name is David Play. I'm a full-time eBay reseller. In this video, guys, we have Mark 2 from Not Your Dad's CPA. I have all his information down below, guys. I encourage you guys to check out the entire video if you guys are stuck on your taxes, if you guys don't know exactly what you can deduct, if you guys are confused. I think this video is going to help a lot of people out. Let's get into the video.
I get that cash and I flip it, yeah. I get that cash and I flip it, yeah.
Yeah, I'm Mark 2, and I am a CPA, and I specialize in helping resellers and content creators with their taxes, with growing their businesses profitably. So I've been doing that for several years now. So yeah, probably like 80% of my tax clients resell on some type of platform, whether that's eBay, Amazon, Poshmark, Facebook Marketplace, whatnot, local sales, brick and mortar, pretty much any type of reselling that's out there, I have helped with at some point. So that's what I do and what I enjoy doing. And then I sold on Amazon for 5-6 years up until just last year. So I am well aware of the challenges and all that stuff that resellers are going through, and I like helping them not have to worry about that tax and business piece.
No, yeah, definitely. I think one of the most common questions that I get on my channel is the taxes part. A lot of people struggle with that. A lot of people are confused. I was confused when I first started out. The first year I didn't even file because I didn't know what to do. My dad, he's been doing it for a couple of years. He didn't file for like 2 years. And then we started asking questions and asking around. And then we found a great guy that's here in my town, and he does our taxes, and he helped me out a lot learning about that. And he had to learn as well because he's been a CPA for many years, but it's not common for eBay or making money on social media. He normally does, business taxes, which is a little different, like a more traditional business. But he ended up, doing his own research, and he's been helping us out a lot. And I think, obviously, you know what you're doing, so it's going to help out the audience a lot. What would you say is like the number one thing that most beginners fail at when they're first starting out? What do you think is the most common mistake they make?
I think the biggest mistake is just not tracking your numbers. And that's one that'll come up throughout this conversation, I'm guessing. And I'll come back to that. But just what you were saying right now reminded me of another common mistake people make. And that is either not having the education they need to be able to do the taxes themselves, or not finding the right person to help them with it. And I get a lot of new clients who come to me and they're like, I had somebody, but he wasn't really comfortable, or she wasn't really comfortable with, this whole eBay thing. Didn't really seem like they knew what they were doing. Mm-hmm. It seemed like I was having to teach them, and you don't want that. You don't want to have to go somebody and to teach them. And they don't have to be a reselling expert necessarily, but like your tax preparer is somebody who's willing to at least do the research and get familiar with it and dive in and do it, because it's not that hard, but it is true that it's not as common. I mean, we're in the reselling world, so it seems like everybody's doing it, but in reality, when you zoom out, it's a really small, portion of the population. So yeah, so that's one tip. Just deciding, can I really handle this on my own, or, is it better to go find somebody to help me out, which often it is, especially if you're just starting out. But yeah, as far as the tax piece, and then, yeah, just tracking your numbers, like just make sure you have a separate bank account. So you're not mixing all that business activity in with your personal activity, because that can get really just annoying to have to go back and try and remember, like, okay, was this business? Was this personal? Because then you're just risking misstating your numbers on your tax return. So you're either going to pay too much, and nobody wants to pay more than they have to, or you're going to pay too little and then potentially be on the radar of the IRS. Nobody wants that either. So,
yeah, definitely. When I first started, I had my Bank of America account, and everything was all in one. And the way we used to do it line by line. And I went and tried to remember how much I paid for each item. The way we do it now, it's obviously way different, but I feel like most people are doing that. They usually don't go into reselling thinking that they're going to take it seriously. I think a lot of people start off part-time, and they kind of just do it as side extra money. And then eventually they start getting more serious. And then, by that time they're like a year in, and then it's time to do the taxes. And it's like, oh, what the heck, what I do. So what do you recommend for like a big when someone is first starting off, let's say someone is watching right now and they just started, what's the best way to file under? What do you think is the first kind of steps they should take? Should they go and get an LLC right off the bat? Should they file as sole proprietary, or should they go for the S Corp route? What do you think?
Yeah, I think when you get started, just relax. Like, don't feel like there's a lot of urgency to go out and form an official LLC or an S Corp or anything beyond that. Like most small businesses in the United States are sole proprietorships. I think it's like over 70%. And especially if you're not operating in an industry or selling stuff that has a lot of risk associated with it, there's just not a lot of risk inherent, like in the reselling industry that most people are in. So it's not urgent to go out and get that limited liability company that's going to give you that liability protection for most people. I mean, maybe you've got a ton of assets that you want to protect. So in that case, an LLC would be a good idea. But for most people, like you don't have to have it right away. And some people dig themselves in a hole. They come to me and they're like, oh, my old CPA or my friend said I needed an S Corp. So like I made sure I had all that in place before I even started. And, if you're in California, that's an $800 per year minimum fee that you have to pay just for having an LLC or an S Corp. And, you may not even be making money yet. And you're like, oh, I didn't know I had to do that. I didn't know I had to put myself on payroll. I didn't know I had to do a separate tax return. So it's like, don't bite off more than you can chew right from the beginning. So just, yes, start slow. And, as the business grows, then you can investigate it. Would it make sense for me to do this next thing? So that'd be my advice on that.
Yeah. I did 3 years sole proprietary. And then I remember the second year, my tax guy, he was like, hey, you should really look into this corporation thing. And I was like, nah, I don't know, man. Like, I don't know. I feel like I don't really need that. And the third year, he put the numbers of what I would have paid, the difference. And I was like, okay, let's sign up. And it was like $1,500 just to get started. And then obviously we pay throughout the year. But it's been a game changer. I do pay myself through the profits of the business, and I explained to him like the social media stuff, and that's been helping out a lot. So basically, I used to sell electronics, and I made my S Corp. The name is Pallets Inc. Right now, like I switched everything to clothing, and my eBay name is Active Apparel Zone. We still kept everything exactly the same, but I'm still Pallets Inc. I'm doing technical stuff like with social media, and I'm selling online. So everything's kind of under the same umbrella, and that's how we do it. So all the income from like YouTube, my wholesale, my website, and then obviously eBay, sponsorships, everything goes into one bucket. And then from there, I pay myself a salary. And that's been a game changer. And it's just a lot easier. The guy referred to me to a local bank. My tax guy, he's like super helpful with this. Like I learned so much. But yeah, he got me a whole separate bank account just so we can completely separate everything. And, but that was 3-4 years in, I didn't start off that way. Like the difference, between, okay, I never really knew this too much. And I think it can help a lot of people out. What's the difference between an LLC and an S Corp? Because he kind of told me, but I don't know 100%. He just told me that would be better for me.
Yeah. Yeah. So, I mean, let's just start out at the beginning. So when you start selling stuff, you don't even have to go out and do anything official to form the sole proprietorship. So that's what the IRS considers you to be just by default.
Mm-hmm.
So if you're starting out, you're a sole proprietor. And typically the next step that you'll take is to go get an LLC. So that's a limited liability company, and you get liability protection. Some people do it just because they want the motivation that comes from taking that next step and feeling more, official.
Yeah. Mm-hmm.
But so an LLC does not give you any tax savings beyond a sole proprietorship. So they're still both subject to self-employment tax, which is 15% of your profits. But when you take the next step to go to an S Corp profits are not subject to self-employment tax. So that's 15% on those profits that you no longer have to pay. So if you're making an annual profit of $100,000 and you don't have an S Corp, that's $15,000 you're basically like throwing out the window that you could otherwise save with the S Corp. So the interesting thing about an S Corp is it's not technically an entity, a standalone entity. It's more of it's an election. So you have to do the LLC, and then you layer on this S election, it's called, and it basically allows you to file your taxes differently or to be taxed differently with the IRS. So yeah, that's in a nutshell what it is. Like it's got some significant tax savings benefits for those who are at a certain place with their business. Like once you start hitting 30, 40,000 of annual profit, you want to at least start thinking about maybe going that S Corp direction.
Definitely. And that's what the guy told me. I think we had done like 120 or something like that. And then luckily I was already an S Corp, but the year prior was close to that as well. And it was a big chunk of money, you know, and then you just pay all at once. But yeah, it's been a game changer. I wanted to ask you a little bit about how you do it. Do you, so when you're a CPA, let's say if someone in California wanted to use your services and you're in Utah or in Denver or, you know, wherever, let's say someone in Florida is trying to use your services, can they work with you, or does it have to be someone within the state that you're in?
Yeah, it can. I have clients in almost every single state. It's different with CPAs than it is for attorneys. You know, attorneys are usually, they have to specifically be licensed in every state. CPAs typically have what's called, there's a different word for it. It's not reciprocity, similar to reciprocity. But yeah, I can operate in any state basically. But beyond that, I'm also an enrolled agent, which is basically the IRS designation that they give out for. It's the highest designation that the IRS gives out, and that's like a federal position. So that automatically enables me to work with any state also.
Oh, that's amazing. So yeah, guys, if you guys want to sign up with Mark, you know, you can hit him up. I have all this stuff down below, and you also do have a course that I checked out that if you guys are like completely just lost still, even after this video, or he does have a course that offers a lot of knowledge on there, which is down below. If you guys want to check it out, with the link down below, it's a shortcut and knowledge that you guys can attain, you know, with one simple course, and it can help a lot. And knowing more with taxes, me learning a lot more with the guy that I work with has saved me tens of thousands in the last couple of years. So one simple course that he offers can save you tens of thousands. A lot of people, especially if you're making, you know, more money, 100,000 a year, 200,000 a year in sales or even profit, that can be the game changer. So I highly suggest that, and it is down below. If you guys don't have a CPA and you guys have just been kind of doing it, or you just started, obviously Mark is a great option. So I wanted to ask something else. You said you sold then, and you resold on Amazon, you said.
Yep.
So you were doing your own taxes, obviously, throughout the entire time. What kind of numbers were you crunching out when you were doing Amazon while you were doing that? Because it takes a lot of time for both, you know?
Yeah, I mean, I didn't put a ton of time into it, so I was doing private label on Amazon. So, you know, I would get shipments occasionally from China and then just send that stuff into the warehouses occasionally. So it wasn't a ton of time. Like I could have freed up more of my accounting time and like put it more into the business, but I just found myself eventually gravitating more to the CPA stuff. But so I cracked 6 figures during COVID finally. Like it was never massive, but it was a decent, you know, a decent operation. I did it with a friend for a while, and yeah, I mean, learned a lot.
No, that's really good. On top of what you got going on, I saw that you have like a whole team in the Philippines. I checked out your Instagram. Do you have people that help you out with the CPA side of things, or what?
Yeah, so it's just a small team. So I just started with one person, and she's been helping me with taxes for 4 years now or something. And she is now an enrolled agent as well. So she took the IRS test over the last few years and just passed that. But Yeah, and then I added on a person to help me with bookkeeping and a person who helps me with my social media and admin stuff. So it's just a a small team, and it works out really well. I pay them probably double or triple what they can get locally, and
Yeah.
it's less than I have to pay here. And I think they're more loyal to me than people might be here too. So it's going well.
No, yeah, definitely. I work very closely with my virtual assistant, which is in Pakistan. But like the relationship is so strong with people that are overseas. They're so loyal to you. You give them obviously good business. I've had people here that I worked with, and it's not even close to how they treat you and how you treat them. It's just a good partnership for everyone. Obviously, money is different over there. It stretches a lot differently. But yeah, guys. Okay, so the way I do it when I pay my virtual assistant, I send him money through like just an online payment thing that's called Wise.
Yep.
I pay him every single week because he doesn't have PayPal, I believe. Um, my guy told me just to write it off as just as like not labor, but something different. Like we kind of implement that
Contractor,
into
maybe.
what was that?
Contractor, maybe.
We kind of put it as a contractor, but since he was overseas, it was a little different. I
Mm-hmm.
don't remember exactly how he did it. He did it because one year I think I paid him like 8,000 throughout the whole year. But he put that under. He couldn't put it exactly under a contractor because it wasn't within the states. What do you think about that?
Yeah, I think I can see why. Like, because if you put it under contractor, I don't know if this is true or not, but maybe he thinks it would flag the IRS, and then they'd be like, "Oh, did you send them a 1099?" And then you'd have to explain, "Well, they're overseas, so I didn't have to send them a 1099." That would be my only idea.
I
But
think
he
that's
probably
exactly.
just put it under other and put his own category name, which is fine.
I think that's exactly what he did, and that was his fear, and because he was like, "Oh, well, he's not even here, like can't even give him a 1099." But yeah, there's a way to do it, even if you pay people online. What else do you think can help a lot of people out? Do you have a couple of quick fire tips for people?
Yeah, so we talked about separating your business activity from the personal. One thing people often don't think about when they're starting out is like having to pay quarterly estimated taxes. A lot of people don't know about that because if you're a W-2, your employer is withholding all that from your paycheck and you don't have to worry about it. But when you become self-employed or even start doing stuff on the side, that's self-employment related, all of a sudden you're generating profit, but there's no one withholding taxes from that profit. So it could be that, I mean, if you exceed a certain threshold, then the IRS requires you to withhold, or not withhold, but set aside your own taxes and make those payments quarterly to the IRS. So, and there's some couple basic rules around that as far as whether or not you have to do it, but that's one thing to look into. And then just, yeah, tracking your numbers, make sure you're aware of what you can deduct, what you can't. So most expenses that you incur throughout the process of operating your business are going to be deductible or at least partially deductible.
Yeah,
So, your supplies, your inventory for sure, contractors, uh, software,
yeah.
so much
I
stuff.
I had a question. I at one point bought a truck, super nice truck, but it was on payments, right? I didn't buy it outright. How does that work? Because at that point I was sole proprietor. I didn't even add it or nothing.
Hmm.
I'm not going to do that anymore. If I do, it's going to be like a cash buy. But how can someone write something off? I mean, maybe someone's thinking of it to buy a car for the business or a truck. How could that work with the business and the interest and all that? Actually, that's a question I had.
Yeah, it's definitely doable. Although that's one that probably does get abused, like, with TikTok advice or whatever, like, oh, buy this, Hummer or this brand new whatever luxury vehicle, and you can write off the whole thing through your business. So I mean, that could be true, but in most cases, it's not going to be true because the IRS will say, well, what percentage of the time are you using it for your business? Is it only 10%? Well, then you can only deduct 10% of the vehicle, basically. And even then, you have to depreciate it over time. You can't always take the whole deduction all in the same year. Um, So yeah, there's some complications around that, but at a basic level, you can choose to either deduct the business mileage.
Mm-hmm.
So, you drive 1,000 miles during the year, business miles, and you can deduct whatever the mileage rate is for that year times those miles. Or you can choose to deduct your actual expenses. So that's your gas, your maintenance, your insurance. You can depreciate it, but only the business portion.
Mm-hmm.
So if you use it 50% for business, you can deduct 50% of the gas, 50% of the insurance. So I would look at whichever one of those methods is going to yield the biggest benefit over time, and then just go with that. For a lot of people, for a lot of resellers who are driving so much to go source, it's simpler and more beneficial just to track the business miles and deduct, those 70 cents per mile or whatever you get.
Let's say the depreciation. The guy told me, let's say if I were to build a warehouse in my backyard that I bought for my personal home, right? And I were to move my business into that warehouse. He told me something that I could rent that out to myself, and the business Paleotech Incorporated pays David Paleo, the person, to rent that out monthly. If I were to build something like that, what do you think about that? I know that's a little more advanced, or that's or if you buy an office, if Mark buys an office and he rents it out to the CPA business, what do you think about that, or what are your thoughts on that?
Yeah, I mean, there might be circumstances where that would be a beneficial strategy. It just depends, because in that scenario, so if you're renting to yourself, on one hand, the business gets a deduction for that rent payment, but then on the personal side, you have to recognize that payment received as income. So
Mhm.
it kind of evens out.
Yeah.
So, but there could be situations in which that makes sense, but typically it can be simpler just to, if you build the warehouse, you can basically just depreciate the building and take that depreciation expense. So if you build it for, I don't know what's considered a warehouse, 50,000,
Hmm.
100,000, I don't know, I don't know how much they cost,
Yeah.
but you can depreciate that over, gosh, I guess for a business, you have to do it over 39 years, but ultimately you can still take deductions for that.
Okay. Okay. Yeah. I'm not there yet, but eventually that's my goal. And I'm just trying to ask questions. I haven't asked him too much, but he told me that he bought his office where he runs everything, and that's kind of what he was doing. But I didn't ask more. I didn't ask further. But like, I'm trying to just learn a little bit more about that, because eventually I do want to get into something like that. One thing my tax guy, like, he gave me a list of a bunch of stuff that, like if you rent out a U-Haul, added in there. Food is something that he allowed me to put, because sometimes I'm out there working or I'm outsourcing very far, and you can deduct some food. What's kind of like your rule of thumb with food? I normally only do like at most $3,500 for the entire year, because a lot of times I am out there and I go source, and that's an extra thing that we can write off. What's a common number, a percentage of that you do?
Yeah, the percentage doesn't matter so much as long as it's a legitimate deduction.
Uh-huh.
Um, the IRS does have specific rules around meals and food. So like in certain circumstances, you can deduct 100%. In certain circumstances, you can only deduct 50% of the meals. And then a lot of types of meals, they don't allow at all.
Mm-hmm.
So typically what they allow is they allow you to deduct meals that are part of business meetings. Like you're meeting with a vendor or an employee or a supplier or something, like that meal is deductible. Or you can deduct meals that are associated with travel, like typically like out of town or overnight travel.
Uh-huh.
So those are the two main buckets. But and those are the ones that qualify for 50% deduction. So,
When you travel?
yep.
Okay, because you're not working the entire time you're traveling, and You know, probably half the time you're just not working, obviously, maybe.
I don't know what the rationale is. It's maybe they don't want you to abuse it. I think that's just the rule. Like meals that qualify, you can only deduct 50%. So if you spend $100 for dinner, they only let you deduct $50.
Gotcha. And throughout my entire year, it might be 10,000 for food or something like that. But we just always kind of end up doing that. But that was when I didn't have my separate card. Because now, let's say I'm working and I go get Chipotle, I just add that in there. But it doesn't add up to too much, you know, because most of the time I just grocery shop and that's on my other card. But it's always been about that much. Another thing I was going to ask that helped me out a lot when I first started, I was renting out a house and I was doing it out of my garage and I had an office. So we obviously, I think it was like 30% of the house was being used for the business. Let's say if someone has a whole entire house or most of it just flooded with items, I've seen it, where the garage, the rooms and all that stuff, how much can you deduct? What's the maximum amount you can deduct, or what's the normal case for people when they deduct from the houses?
Yeah, that's another one. I mean, there's no max percentage. It's basically like if you're legitimately using, 90% of your house for the business exclusively, then you can deduct 90% of your rent or mortgage interest and property taxes and utilities and all that stuff.
Oh, wow.
So, I mean, I have a handful of clients, they have a 2-story house or maybe a basement, and they use the entire basement for, they use it as their warehouse and their film studio and whatever else. So basically they can take 50% of all those shared home expenses and use that for the home office deduction. So that can be a really beneficial deduction.
Yeah, and I remember when I was first starting out, I was gonna just rent out an entire house and just fill up all the rooms with like little racks, and I was just gonna do it like that and use the backyard to process items. And for a while, that's how I did it. But I had a roommate at the time. But yeah, we were just had it all flooded, But then luckily a warehouse popped up and that changed everything. Now I just really need a little apartment for now. And just a little office, I was going to ask you, what's the craziest situation that you have seen of someone either getting in trouble with the IRS or a deeper investigation happened with someone and it just went crazy? Do you have a crazy story from all your years?
I mean, surprisingly, I don't really, and this should be encouraging, I guess, to people, because out of, thousands of tax returns, I think only one of my clients has been audited, and they didn't even have particularly clean records. But when you are audited, it's pretty much usually all by mail. They send you a letter and they say, hey, we want to look at these additional categories. Can you send us some detail? And he basically just had to go back and do his best to put together that detail, and then that was pretty much it.
Okay.
So, I mean,
yeah,
most IRS letters are just like, hey, you missed something on your tax return. Here's some additional taxes you owe, which may or may not be true. Or sometimes they send out letters to confirm your identity. But I've never really seen anything like just crazy. Like most things are
dropping it down. That's what people think. I got a letter once from them saying that I back owed $12 in taxes or something like that.
Oh, wow.
But I mean, I just paid it, I just called and paid it, but I didn't know that's how they did it. I thought they came and knocked. That's what people, they come down and knock and just pin you to the ground. But no, yeah, that's good. I think a lot of people are scared of it, obviously. If you were to file and you don't pay right away, I've seen that where you don't really get in trouble for not paying, you get in trouble for not filing, right?
Yeah, I mean, you can get a little bit of trouble for both, but the penalties are more severe for not filing.
Uh-huh.
And then as far as payment, they can put you on payment plans and stuff. But they really want to make sure that you file your taxes so that I don't know, I think it's so you're on their radar, maybe.
Yeah.
And I have, several hundred clients that are in the reselling space or the content creation space or both. I mean, there's been a few times where I've been doing somebody's taxes for 2 or 3 years, and I had no idea that they have like a few 100,000 subscribers on YouTube. I'm like,
Wow.
oh shoot, I didn't know. I had
Yeah.
no idea.
They didn't add that to the taxes?
Um,
Or they just put that as like earned income and you didn't know where it was coming from?
yeah, that's a good. It may not have been split out. It might have just been all lumped in their sales number.
Um, what's another quick topic that you wanted to get into about the taxes and you think that it can help a lot of people out?
Yeah, I mean, I think just knowing the basics, especially for beginners, because a lot of people start, or even if you've been doing it for a while, a lot of people have just this constant fear that's in the back of their mind all the time, like, oh, I think I might be doing this wrong. Is the IRS going to come get me? But it's usually not as bad as you think it might be. And just learning about the basics can 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 be so effective in reducing that anxiety and giving you peace of mind that then frees up a ton of space to just focus on your business activities that you enjoy doing. And when you were talking before um, about my course,
Mm-hmm.
like something that happened to me a few months ago is I have like a 30-day refund policy. Like if you're not satisfied with the stuff in there, or if you feel like you know it all already, you can email me and we'll give you a refund. And typically people don't do that, but I did have one guy email me and he said that he already knew everything that was in my course and he wanted to send me proof, and he sent me a spreadsheet that he had put together over a long period of time, I think. But he just had this crazy spreadsheet of like, 100 different topics, and then a link, all sorts of links to everywhere on the internet that talked about all these different things. And I was like, okay, yeah, like these are probably all good articles and they're like in 100 different places. And if you want to do that, like if you want to spend all your time researching and going everywhere on the internet to
Mm-hmm.
find the information, that's great. Like you can do it. You can read the IRS website, which is really painful. Um, or, I tell them you can buy my go at your own pace, 4-hour reseller tax academy course where I put everything in there that I think is important to resellers. Um, so yeah, that was just a funny experience I had. Like
Yeah.
it's all out there. It's just like, what do you want to spend your time doing?
And the thing is, for him to gather up all that information, it probably literally took him years to have the links and everything ready. That's a lot of knowledge that you have to acquire over so many years to be good at that and to know everything. And obviously, that's one guy. That's a rare occasion that
Yep.
probably all that stuff. But definitely, I noticed that there are a lot of other people that know a lot more of you, and especially when it comes to that, that's a great way to just save your time, 4-hour course, and get all the knowledge that you have already acquired over all the years, and you bunch it up into something simple and digestible where you don't have to read pages and pages and pages. And that's obviously tax code is super complicated. So you made it a lot more basic and digestible, so that's the thing that you're offering for a pretty good price if you think about all the things that you're going to be able to save on once you actually know what you're doing a little bit. And I feel like even just a few little simple mistakes that people make are like they don't track certain things. It can add up a lot at the end of the year when you're paying the taxes, especially at sole proprietary where most people are starting out. So knowing exactly what you can write off, what's kind of like something that most people don't know that they can write off that is actually, being able to be used. What's like a couple of things that most people don't know of?
Yeah, I mean, we talked about the home office deduction. That's one that people either don't think about or maybe they're afraid to take it, but that's one you should definitely take advantage of if you qualify. Just tracking your business mileage. A lot of people know or think you can probably deduct your vehicle somehow, but they're not sure how. There's two different main methods you can choose from. Like a lot of people don't realize you can deduct your cell phone bill. If you use your cell phone 60% or whatever for the business, then you can deduct 60% of the phone and of the bill. Same thing with your internet.
Yeah.
Yeah, and some people just don't realize that you can pretty much deduct anything that is for the business. I mean, not everything, but most things. And again, that includes like all the business supplies, office supplies, software, advertising,
Yeah.
subscriptions, like education. If you go to a conference or stuff to increase your skills.
Yeah. No, that's one thing for sure. Let's say you guys buy this course. That's a tax deduction because it's for the business. That's one thing right there. If you're buying materials, any kind of materials for your business, that's a deduction. Okay, let's say a lot of people, I think their number one thing when they're out there sourcing is that they're paying cash. So what I do is when I'm done for the day, and I usually know exactly how much I need when I go source, because the guys that I go with, let's say I pick up 50 pairs of shoes and it's $5 each. I know exactly how much it is. But let's say if someone pulls out $500 when they go to the yard sales or the flea markets or something like that, what is a good way to keep track of that? Because a lot of people are scared because it's cash. It's not you don't have a receipt. You're not using a debit card. There's no footprint of it. And let's say you pull out $500, you only spend 100, and then this other day you spend 150 and then 200, or they can just spend all the 500. What's a good way to keep track of all that? Do you write yourself a receipt? What do you think?
Yeah, you don't necessarily have to write yourself an official receipt, but as long as you're keeping track somehow, some type of record, just that could be a spreadsheet, that could be like a notebook where you're just writing the date and how much you spent and what the items were. Just a basic record. Like ideally you would have a receipt from the vendor or the store, but for a lot of people, especially those who focus on garage sales or flea markets, like you're not going to have that. So all you can really do is keep your own record. And I think the IRS understands that. So as long as you have, make at least an attempt to keep your own records, then you'll be fine.
Yeah, definitely. The way I do it, that works for me, because I do buy in some stores. I do get some receipts. But most of the time when I go buy something, I already know how much it's going to be. So I pull out the exact amount. So an easy way to do that is at the end of the week, I just see how much money I pulled out from that business account. And that's kind of my cost of goods. And another thing that I want to get into as well is, can you let's say you spend $10,000 in the last month of December on inventory and it doesn't sell. Do you roll that over into the following year, or is that part of your cost of goods for December? How does that work? Because my guy told me in like a normal business, like it's not a deduction until it sells, right? For the cost of goods sold.
Yep. Historically, that was the required way to do it. So when you purchase inventory, you don't take the deduction immediately. You'll deduct those costs when you sell those items. But one thing that changed with that legislation that we talked about that went into effect in 2018 was it gave us more flexibility with inventory. So the way we mentioned is I referred to as the accrual method for inventory, but now there's also the option to use what I call the cash method for inventory, and that is just deducting it immediately when you purchase it. So you just have to know which method that you use. The IRS doesn't want you changing it back and forth every year because that creates issues. But if you are a cash method inventory seller, and you want to reduce your taxable, your tax bill at the end of the year, then you can go out and buy 10,000 of inventory in December and deduct all of that. So you just have to know which method you're using.
And now that it just clicked right now too, my tax guy actually told me that. I just remembered, but he told me because at the end of after the years of the whole entirety of the business, it ends up being the same thing. Because in the following year, you're not gonna. Let's say if you make 80,000 off those 10,000, then the following year you don't have that 10,000 deduction. So it kind of just keeps rolling over, right?
Bingo. Yeah, over time, it's going to even out.
Yeah, it's pretty much the same thing. Yeah, and the way I've been doing it week to week, how much did I spend on inventory, and that's pretty much it. I think that's a good way to do it. To just do it as you go, and then obviously, anytime you rent something out, any kind of equipment, let's say if it's just one-off thing, or when you're buying your shipping labels, or not your shipping labels, your shipping supplies, the way I do it, Amazon and eBay is where I buy all my stuff. They let you go back years. So I just looked as I go as well, but you can go throughout the whole entire year and add up all the stuff that you bought if you're behind on that. But back in the day when I was trying to catch up on those years of taxes, I just went and added every single thing I bought on eBay, anything that I used, computers, scales, tape gun. When I went to Walmart and bought something like quick, I kept track of all that stuff. And then the way you can go back on certain banks to really go back, I'm doing it because of my experience where I messed up. If someone is behind, or it's 2025, they sold all 2024, they have no they didn't keep track of anything, you can pretty much go month to month and see line by line where you spent money and kind of start adding up and backtrack. But I know because I had to do that, and I had to help my dad with that too because he was so behind, we didn't know what to do. But certain banks are better than others. Mine's a small one where I have to kind of go through everything. There's some that separate pretty much everything in charts where you spend gas, food, and all that stuff, and it helps you out a lot. Mine is more old school. It's like a smaller bank, and it doesn't do that on my app or in my bank statement. So that's why I'd like to just do it as I go. What's a good way to keep track of it? Is there like a certain app that you recommend, or is there like an Excel spreadsheet, or do you have something?
Yeah, it just depends on what you're comfortable with and where your business is at. Because somebody who's just starting out, using something like QuickBooks Online might be overkill. You don't necessarily need all those bells and whistles. I mean, there's nothing wrong with a good spreadsheet, but some people hate spreadsheets. So it's a lot of it's personal preference and just trying whatever and finding something that works for you. So there is a spreadsheet on one end of the spectrum, and there's a robust bookkeeping program like QuickBooks Online or programs like that. And there's a whole lot of options in between. There are simpler bookkeeping programs, and some are reseller specific.
Mm-hmm.
So like there's one called Seller Ledger. There's one called My Reseller Genie. There's Flipwise. Those have all been created within the last couple years specifically for resellers. So, I mean, it's worth poking around and finding a system that works for you.
Okay. Right now I'm just doing in my notes because I always keep it, and I just write away on the date, like if I go right now to Walmart and I buy a couple things, I just write it down right there, Walmart, and I put that under the category that it goes in, and then I just add it up, I haven't done my quarterly taxes because you mentioned that as well. And that's something I want to get into just because at the end of the year, it's a big chunk, and I want to figure out a good amount to put to the side. I already kind of have a good understanding of how much you should. For someone that's watching, what's a good percentage of money that you should put aside just for the taxes?
Yeah, I feel like I just released a YouTube video on this, maybe. A lot of people say 30%, and that's typically a good conservative estimate, but it's going to be high for a lot of people. So, I mean, because you're gonna want to include at least 15% of your business profit for that self-employment tax piece, and then another 5 to 10% for income tax, and that'll be determined by your total income. That determines what tax bracket you're in. So that you got that 15% plus that 10, maybe 25% total, 25, 30%. That's where that comes from. Maybe you have some state taxes in there. But yeah, typically between 20 and 30% is what you want to set aside.
Yeah. And once I switched over to S Corp, I got rid of the income tax,
The self-employment tax.
And the self-employment tax. And that was just like amazing, once you add it up for a whole year. And I do pay myself a salary of like $1,000 a week. And every single week when Paleo Tech pays David Paleo, it's like $200 a week that, that it costs me to do that, but it's like kind of like paying the taxes because it's like 52,000 a year, but let's say if it's $100,000 of profit, 52 is for my work, for the work I'm putting in for the business. I'm just an employee, for the business. And then maybe the other 50,000 can be deducted through rents, Wi-Fi, tools that I use, tools that I buy, all that kind of stuff. And it's just been a game changer. But if I only recommend that for people that have been doing it for a couple of years, we're just starting out. Try to keep track as much as you can and do the sole proprietor way. Once you start making more money, I definitely think people should look into that for sure.
Yeah. I mean, once you get up into that 30, 40, 50,000 profit, it's worth exploring.
Definitely. But yeah, man, I think we have a great combo. I'm going to chop it up and edit this because I was off my A game. Normally I'm firing and just have everything in my brain, but I apologize for that.
Those seem fine to me.
No, yeah, thank you for coming on, man. Guys, the course is down below for the tax course, and you guys can check that out. All his links are down below for his social media, his YouTube, his Instagram, and you guys can check him out on there. He drops videos pretty much every week, right, on your YouTube channel?
I'm trying to do every 2 weeks for tax season.
Okay.
See if I can keep it up after.
Yeah, guys. So he's dropping good content on there. A lot of information. If you guys are looking for a CPA, he's right here, and he can help you out. He knows exactly how this works when it comes to, selling on eBay or Amazon or OfferUp or Facebook. It's going to help out a lot. Or if you do social media. And yeah, guys, this is Mark right here. My name is Dave Paleo. If you guys joined and checked out this 1 hour video, really appreciate you guys. And we're going to catch you guys later.